Hello and welcome to the Fibonacci free video for Friday, August 18th. This is David, and hey, last Friday we were looking at Apple because last week the name did break below its Voodoo fireline, the most important of the Voodoo line levels, and these Voodoo lines do incorporate elements of Fibonacci, and we talked about how there is bearish potential so long as price stays below this level, but how it needed to break this less important skyline if it's going to keep heading to the downside. And it stayed above that level for the better half of this week. But what I wanted to show you is how we construct these Voodoo line roadmaps, right? We talked about the fact that breaking this would set up the potential to the downside, but see how systematic this behavior is, that it lets go of that upper skyline and runs right to the next skyline. And while it did break free of that second lower skyline here today, notice that that it retested the level from below to show that it was going to hold. And look, sometimes it will fall right to the next level, but sometimes it'll want to check and see if it wants to stay below. This is very classic behavior, and I'll keep showing these to you as we see good examples of them, and point out what we would expect to happen if Apple is going to stay bearish below the 180.66 level. So look, eventually it should use resistance at 174.54, either directly from the revisit today or subsequently to test 170.75, and then breaking below that would keep the pressure on the downside and show that Apple was remaining intent about in pushing away from this most important nearby level to the downside. Now, there will be a pair of snow lines below us prior to getting to the second degree level of 154.74. And while that's a long way down, what we're trying to gauge is whether or not Apple is starting a new downtrend from this higher snow line visit up at 196. So long as this incrementally keeps pushing away from levels, from more important levels, right, to the downside, then we're going to keep viewing it as potentially reversing. And one of the reasons why we want to look at that potential is, look, let's come in and look at the move up from the start of the year, right? Already this decline that we're in now has become larger than even the largest pullback since that January low. So what we look for next is we look for other symmetry levels, and the one that always stands out is the one that ended the prior move in this direction. So down from the summer of 2022, right? This was the last leg down. We project that down from the high, and we're right at a decision spot here, right at symmetry to that prior move. I mean, we dipped a toe below it today, but closed above it. I'm willing to call that right at symmetry. And so if we carry that observation back to our Voodoo Lines roadmap, right? I mean, this isn't necessarily a stopping point here just above the snow line. If it is, we'll climb back up, and we can have a pretty good idea that we're turning back up if we have support above the fire line. Until then, let's see if it can use that resistance to break symmetry and break below the snow line. So that's how I will be watching Apple, of course, in conjunction with the trends we're seeing in the overall market, which we'll talk about here in the premium video. But I hope you found this useful, and I will see you at the next update. Hey, David here with Simpler Trading. Thanks for taking a few minutes to watch this video. I hope you found it useful.
And if you did, please help us out. Click the like button. You can also add your comments below. We love to read those and respond to them. You can also click the bell icon. That will alert you whenever we have new and updated videos. And if you want to watch us trade in real time with our own money, you can visit simplertrading.com to learn how to sign up. Until I see you again, as always, good trading, and we'll see you at the next video.